Progressives have argued that the current system of taxation is broken and needs an overhaul. Could the solution really be as simple as taxing the rich? Hello and welcome to Practical Personal Finance, where you get the information you need to understand and succeed with money. The phrase tax the rich has been trending recently, so I wanted to use this opportunity to dig deeper into what that really means. Today I'm going to explore 3 different types of taxes, talk about what each of them are like now, and what a more equitable system of taxation might look like. First is a tax that I'm sure just about everyone is familiar with, sales tax. The concept of sales tax is simple. When you buy something, you get taxed. The amount of tax you have to pay depends on the amount you spent on your purchase. As an example, let's say you lived somewhere with a sales tax rate of 6% and you bought a new pair of sneakers for $100. To calculate your sales tax owed, you would simply multiply the purchase price of $100 by the sales tax rate of 6% in decimal form, and you get $6. That amount would be added to your purchase price, making the total $106 including sales tax. In the United States, sales tax is administered at the state and local levels, and as a result, there's not much consistency across the country. In states like Louisiana and Arkansas, the sales tax rate is over 9%. In states like Montana and New Hampshire, there's no sales tax whatsoever. Some states charge sales tax on digital purchases. Others only charge sales tax when there's a physical item involved. Some states impose sales tax on groceries. Others don't. Which leads me to wonder, which way is best? Sales tax is something called a regressive tax. A regressive tax is applied uniformly to everyone, regardless of their income and economic status. This is the opposite of a progressive tax, which I'll discuss in just a few minutes. No matter what your financial situation is, you'll still pay the same sales tax rate when you walk into the store and buy something. In the previous example with the $100 sneakers, it doesn't matter if you're a billionaire and earn more than $100 million per year, or if you're broke and work a minimum wage job. You still gotta pay that $6 in sales tax. The difference is that to a billionaire, $6 is almost too insignificant to think about. But to the guy earning minimum wage, he spent nearly an hour of his time working to earn that $6. It's a much bigger deal to him. One might argue that spending $100 on a pair of sneakers is a luxury and not a necessity, and I can see that. But what about spending $100 on school supplies for your kid? On a basic smartphone? On groceries to feed your family? That's where things start to get a little bit hazy. In my mind, an equitable solution would involve eliminating sales tax on a wide variety of essential items, especially groceries and household supplies, and reducing sales tax significantly on everything else. Sales tax disproportionately affects the lower class, especially in states with the highest sales tax rates. Reducing and in some cases eliminating that tax will help those who need it most. If you agree, let me know by giving this video a thumbs up. The second type of tax I'd like to touch on in this video is income tax. The concept of income tax is a little bit more complex than sales tax, but don't worry, it's not too bad. On a basic level, income tax is what you pay the government whenever you earn money. I'm sure you remember getting your first paycheck and being a little bit disappointed when you learned that a big chunk of it went to income tax. Income tax is administered at the federal, state, and in some places at the local level. For this video, I'm going to focus only on federal income tax because it's an example of what's called a progressive tax. What that means is it's not applied equally to everyone. In the case of federal income tax, the more money you earn, the higher the percentage of your income you need to pay in taxes. As of this recording, there are 7 different tax brackets for federal income tax in the US. If you were single and earned $30,000 per year, the first $9,875 of your income would be taxed at 10%, and the rest would be taxed at 12%. If you earned $60,000 per year, $9,875 of your income would be taxed at 10%, just like before. Then everything up to $40,125 would be taxed at 12%, and the rest would all be taxed at 22%. As you keep earning more and more money, eventually the federal government will take as much as 37% of every additional dollar you earn. This begs the question, Is this whole system of progressive taxation fair? You might argue that 37% federal income tax is a lot. In some places that have high state income tax rates like California, you could be looking at close to 50% of your income going straight to the government. But that's only for income above and beyond more than $500,000 per year. If you're making that kind of money, you can afford to send the federal government 37 cents out of every dollar you make. It's not going to impact whether or not you can live a very comfortable life. But if you're down in one of those lower tax brackets, earning $25,000 or $30,000 per year and struggling to get by, every penny counts. Luckily, the federal government only wants 10 or 12 cents for every dollar earned in that case. In my mind, federal income taxes are administered in a pretty equitable way. People at the top are asked to shoulder the heaviest burden, while those at the bottom are relieved, though not entirely. Those who earn the most have also benefited the most from the capitalist society we all live in, so I believe it's fair to ask them to contribute a larger share of their income. It might not be a bad idea to introduce an 8th or even a 9th tax bracket for ultra-high earners. Perhaps something like 40% for income beyond $1 million per year, and 43% for income beyond $2 million per year. In doing so, perhaps the lower tax brackets could be expanded to include up to $15,000 at 10%, or up to $60,000 at 12%. By the way, if you're interested in a more detailed explanation of how federal income tax brackets work, I made an entire video on that specific topic. Link is down below. The third and final type of tax I'd like to talk about is a wealth tax. The way a wealth tax works is that the government will ask for a declaration of your net worth on a yearly basis. So you'd have to add up all your assets like cash, real estate, and investments, then subtract all of your liabilities like student loans, credit card debt, and mortgages. If your net worth ends up being higher than a certain amount, you're taxed a certain percentage, something small, like 1 or 2%. There's no such thing as a wealth tax in the US right now, as of this recording, but the idea of implementing one has been tossed around, and it's definitely starting to pick up some traction. Because a wealth tax only kicks in if you have a high enough net worth, it's different from sales tax and income tax in that only those who are wealthy are required to pay it. How wealthy? The threshold being kicked around is $50 million. Under the proposed Ultra-Millionaire Tax Act of 2021, any wealth above and beyond that amount would be taxed at 2%, and any wealth above and beyond $1 billion would be taxed at 3%. So, as an example, if you had a net worth of $51 million, you would be subject to a 2% wealth tax on $1 million. Remember, the tax only applies to anything above and beyond $50 million. So you multiply $1 million by 2% in decimal format, and you wind up with $20,000 in taxes owed. Pocket change for someone worth 51 million bucks. On the higher end, someone with a net worth of $1 billion would owe about $19 million per year under this proposal. That sure does seem like a lot, but when you consider that a billionaire could buy a brand new Lamborghini every single day for the next 10 years and still have enough left over to be taxed on wealth, maybe it's not that big of a hit. In my mind, a new tax on wealth wouldn't be such a bad idea. You've got this group of people who have more money than they'll ever be able to use. And that money, instead of being used to make everyone's lives a little bit better, is sitting in a bank or brokerage account somewhere, becoming larger and larger by the day. I say we tax the Elons and Jeffs of the world and allow everyone to share in the prosperity. That's just me. What do you think? Should we implement a wealth tax? Let me know in the comments. If you liked that Lamborghini analogy, you'll love my video about what $1 billion can buy. Click right here to watch. And if you're not yet a PPF subscriber, what are you waiting for? Click right here to hop on board. As always, thanks for watching. I'm Andrew Scheer, and I'll see you next time.